Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com tells us that the markets enjoyed their best quarter in several years. He also updates the bond market. TrendsJournal.com publisher Gerald Celente talks about his revised forecast for the economy and what plummeting car sales in China tell us. Ed Steer from EdSteerGoldandSilver.com gives us details on what's happening with the gold and silver markets. He also has the latest from the Gold Antitrust Action Committee. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
Always a pleasure to be with you, Jim.
Ross, is it really true we've had one of the best quarters in a decade on the stock markets?
Pretty much so. I mean, you got to go back to the beginning of this bull market, and typically your biggest percentage gains, your best gains are coming off of bottoms. But now, I guess if we hadn't had as bad a quarter in the fourth quarter of 2018 with the Dow and S&P down into that Christmas Eve low, this advance might not look as big as it is, but the swings in the last 3 or 4 months now have been very, very large. You know, we had some great capitulation signals in there right around Christmas, but, not in my wildest dreams did I think that we would be coming back as strongly as we have here. There were some natural points of resistance. But, as we know, when markets are trending, you've just got to watch the trend themselves. Yes, you look for excesses along the way, but if you're in an uptrend and each of the underlying supports is holding on pullbacks, and if all you're doing in some cases is pulling back to the breakout levels, that just becomes a point to say here's your make or break, and stay with the trend as long as it's in motion. And, there it was about 3 weeks ago, we had that small pullback in the S&P. It dropped off to maybe about 27 and a quarter. And that was the first decent pullback off the bottom. It generated an oversold signal for us, which means that's the first of what we call a springboard. And you will invariably go back and test the top of the range. And in a good, strong market, you'll take out the highs. And that's exactly what's happening. So and you could find various reasons behind it, but clearly the decline in interest rates has been a significant part of this. And whether that's the Fed moving with what they've seen in a slowing economy, or whether it's a push from the White House, that's it's irrelevant in terms of what's causing the move. The fact is that it is happening. And we had some pretty big signals at the bottom of the market for the notes, Treasury notes, and for the corporate bonds back here in November, December, at a point when nobody wanted to own these things. The positions of the commercials, the non-commercials were such that we were hitting extremes on one end. And as of the last couple of weeks, everybody's been on this bandwagon of lower rates to the point where the small specs now have their largest net long positions in history on the Treasury note, and the same thing over in the long bond. And in that instance, when we look back on it where we've got more history, you find that an interim high usually occurs within a month. And so this market the bond market is very overextended. It's had 2 good rallies off the bottom. It's getting some big overbought signals, some exhaustion signals. So the probability here of rates finding an interim low and bonds an interim high, we're probably going to see that during the month of April.
What has this done to the price of gold?
Well, price of gold was actually holding in reasonably well up until the tail end of this week. But we've seen a good move in the U.S. dollar more than anything. And with that, gold had been up around 1320, had a bad day, a couple of bad days. The middle of the week got down into the 1280s. So it's got itself boxed in here. The gold-silver ratio now is at an extreme level. We haven't seen gold this strong relative to silver, even though gold's down. It's nothing compared to what silver's been doing. So the gold-silver ratio is at levels that we haven't seen since back in 2009. And before that, I mean, you've got to go back the better part of another decade before you see levels like this. That is normal as gold is starting to bottom out. And looking at the big picture, you know, we've got gold here stuck under 1360-ish since back in 2014. Got up and tested that resistance level 3 times, I guess 2016, 2017, early last year, and then again here in the last month or two. So there's a basing action going on here, whereas silver is just continuing to walk down. I think, if we get down into that 1265-ish range we've talked about, there should be some pretty good support in the gold market. And then coming off the bottom, you might be looking for silver to start to take some leadership. And thinking about leadership in precious metals, palladium had been the big winner for the last year or so. It's created pretty big reversal here, topped out the better part of 10 days ago, and in a span of about 5 or 6 trading days, it's given back 38% of Fibonacci 38% of the whole rally since August. And this is pretty big. I mean, the price had almost doubled from the August low. So for it to break as hard as it has right now is important. It's oversold, in need of a bounce, but it probably has got a bit more of a sell-off before it's ready for its next bout of strength.
And we'll have more on precious metals with Ed Steer coming up on the show. Ross, taking a look at the crude markets, what's happening there?
Had a pause early in the week here, traded down into the $58 range, back over 60 at the end of the week. This is one of those ones that has just been methodical to the upside. And I would say that the key level to be watched at this point is that $58. If it violates that, then you could see a decent correction, probably down into the lower 50s. The commitment traders numbers are starting to get high, not to the extremes that you would see maybe a 20 or 30% decline in price, but the ones where you would typically see maybe a 10 or 15% price correction to the downside. So we're talking about maybe $6 to $8 off the highs, which would at this point push us maybe in the $52 to $54 range on a decent correction. And that, I think would be reasonable within the overall picture that we're looking at, which is a 2-year bull market off the December low of last year. And, I think, ideally you're looking at levels that are well over $80 before this rally, the 2-year phase of it, has managed to run its course.
Ross, are you planning some new charts coming up?
Well, we actually did a piece on the bond market here this week, and I'd be happy to send that out to people if they contact me at Ross Clark at chartsandmarkets.com, and I'll send them out a sample.
Ross, thanks a lot for the update.
You're welcome.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Trends Journal publisher Gerald Celente next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Gerald Celente, publisher of the Trends Journal, available online at trendsjournal.com. He's speaking to us from historic Kingston, New York. Gerald, welcome back to This Week in Money.
Well, thanks for having me, Jim.
Gerald, you have a new issue of the Trends Journal out. What's in it?
Oh, a lot of things. A lot on cannabis, where the economy's going in 2020, substitutes for plastics, all the way through to health, fitness, nutrition, you name it. It's all in there. What's going on geopolitically, Venezuela. So it's another issue of information, of history before it happens.
The Russians have troops in Venezuela. Is this going to be a flashpoint of some kind?
Well, again, how many troops do they have? Under 100. How many troops does America have in Syria, in Iraq, in Afghanistan? For the United States to condemn what Russia is doing in Venezuela is the height of hypocrisy. But that's all America's foreign policy has ever been, is hypocrisy. And so, at least since the end of World War II. And so, it's an issue because Russia is very heavily invested in there, to tens of billions of dollars in terms of oil. And China, big loans coming back, that they've loaned money to Venezuela, they're paying them back in oil. And when you listen to America's National Security Advisor, John Bolton, it's very clear what America's doing in there. We wrote about this in detail in our previous Trends Journal. And he made it 100% clear that he wants to have American companies in there, oil companies, and it would be, quote, good for the American people. So that's all it is. As I kept saying, you think America would have invaded Iraq and Libya and destroyed the places if their main export product was broccoli? So it's all about oil. And America has absolutely no right telling China, telling Russia, or telling any other country what they should be doing in Venezuela. Again, here's the quote from John Bolton. So to make it 100% clear of what's going on over there. Quote, we're in conversation with major American companies now. It would make a difference if we could have American companies produce the oil in Venezuela. It would be good for the people of the United States. This is treasonous, murderous language that no one is calling this guy out and the Trump administration for what they're doing.
Gerald, was the fourth quarter 20% drop from the U.S. stock markets a prediction of a recession in the U.S. and around the planet?
Yes, but again, we reversed our forecast of a economic 9/11 when the Federal Reserve backtracked on their projections of raising interest rates 2 to 3 times in 2019. Because when we made that forecast in 2018, they were going to raise interest rates, but then on January 4th, 2019, the Federal Reserve Chairman, Jerome Powell, said they were going to be patient in raising interest rates. Here's our forecast, Jim. They're not going to be patient in raising interest rates. they're going to be aggressive in lowering interest rates. If they raised interest rates 9 times since 2015, they could lower interest rates aggressively in 2019 and 2020. The presidential reality show. Trump wants to get reelected. You need a strong economy. And what's going to temporarily boost the economy, as it already has, is record low interest rates. And that's what we see happening again around the world, where they can do it, from Australia to Canada, from the United States, but they can't do it in Europe or Japan because they're already in negative territory there, so you'll see more quantitative easing. So yes, we see an economic global recession, but it's going to be somewhat stemmed by more monetary methadone being pumped into the system. Therefore, we're making our forecast of the greatest depression to happen after the 2020 elections.
For countries that have gone into negative interest rates, is there any way to ever get out of them?
Probably not in our lifetime. And unless they start, you're going to start maybe seeing the demise of the euro as countries keep pulling out, trying to pull out. But other than that, we see that this is a war against the savers. People have no place to put their money, and that's what pushes up the equity markets, because you're being forced to invest in those as well. So, it's hard to say, but, we don't see it at this time.
What do you see ahead for the U.S. stock market?
More volatility, and about where it is now, not much growth from it. And again, the key is going to be earnings, and that's going to tell the story. Earnings were boosted primarily in 2018 because of the stock buybacks that recorded over $1 trillion worth of stock buybacks, merger and acquisition activity. So now with the pullback on the tax gains, the corporate tax, that's what boosted again. It was the corporate tax reductions and bringing back money from overseas that boosted the market with stock buybacks. Once that slows down, we see the stock market slowing down, but we don't see a crash at this time, unless, of course, a wild card event, be it war, spiking oil prices, something to that effect.
Would a strong or weak U.S. dollar help with U.S. trade deals?
Well, a weaker dollar would obviously help, because the people that are selling their product overseas, you need a weaker currency so that people could afford to buy it. And there's no greater example of that than Germany. If Germany had still had their old currency, they would not be one of the world's largest exporters. All of Europe is merely nothing more than a colony of Germany. That's why Germany loves that euro, because if they had their own currency, that currency would be worth a lot of money, and they wouldn't be able to export as much. But because they have the euro, they're able to export more because of the low value of the euro.
We'll have more with Gerald Celente when This Week in Money returns.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Gerald Celente. Gerald, Brexit is such a dog's breakfast. Is it ever going to be complete? Should the UK stay in Europe or get the hell out?
Well, it's not for me to say what they should or shouldn't do, but how about they had a referendum and the majority of the people voted to leave? But the people's vote means nothing. Anybody believes that the people's vote counts, you better grow up. Because look what happened in Greece when the people voted against the austerity measures, again, imposed upon them by the International Mafia Federation that people call the International Monetary Fund. It's nothing more than a mafia foundation. And who did they have to repay? It was what I was saying earlier. All of Europe has become nothing more than a colony of Germany. So they forced those austerity measures that have destroyed so much of Greece, that have forced them to sell so much of their public assets to foreign nations. The people overwhelmingly voted not to take those austerity measures. And the Greek government said to the people, screw the people. What do we care about your vote? You're nothing. We're going to do what we want. So they took the austerity measures. And they're doing the same thing in the UK. The people don't count. So there'll probably be a deal where they won't Brexit as hard as the people want, and it'll be more of the same, just a little bit different.
How are gold and silver looking?
You know, they're stuck in where they've been for the last several years, you know, and they can't break out. And gold, I've been saying this for 6 years, it has to break over $14.50 an ounce to gain strength. It hasn't, and we said in order for that to happen, it has to break over $13.85 an ounce, and it hasn't been able to do that. So it's in this cycle. The downside risk we see of gold is $1,200, because that's about what it costs to pull out of the ground when you average it out from Peru to South Africa. So we still see gold as the ultimate safe haven asset, but it's in a trading range. And it needs something happen, a wild card event that's going to destabilize global equity markets and economies and currencies for gold to go higher. And silver follows gold.
Getting back to Venezuela, at some point, could Venezuela become a good place to invest?
Boy, that's a rough one to say. You know, maybe in the next 10 years or so, but we don't see it happening now. There's going to be a lot more destabilization as the overt military coup of the United States to overthrow the democratically elected government of Maduro, the president, continues. And it's pure propaganda that they said it was a fraudulent election. The election was monitored in 2018 by international monitoring groups, and they said that the election was perfectly legal and above board. And more people voted. Only 46% of the people supported Maduro, and they had a low voter turnout. But when you look at the United States, only 26% of the eligible voters supported Donald Trump. So this is nothing more than propaganda. So to invest there, it's a tough one. It's really tough. And that's why you see Russia, of course, investing in their oil. But there's so much destabilization. I think it's going to be years away.
We're hearing China may accelerate its money printing. If they do, would that affect the world?
It'll affect the Chinese yuan, and China has to do something to boost both their GDP at all levels. You're seeing industrial production numbers come out. You're seeing car sales. Car sales last month declined 42% in China. 42%. You're looking at the real estate bubble over there. They need to inject more money into the system. They're running out of ways to do it. And so it won't hurt the global markets. It'll hurt the Chinese the most. And they're really in trouble. I talk about the United States debt level being at 22 trillion. China's is about 40 trillion. And remember, they built that 40 trillion from the middle 1990s to now. So they have some real problems, and they're going to be very hard to solve.
Could that lead to social unrest in China?
Absolutely. You know, China's greatest fear isn't America. It's their people. It's the people. There are protests going on continually, worker protests that don't make the news. It was estimated at one time some 30,000 a year in major protests. So China has to keep its 1.4 billion people quiet, and they're going to do anything they can to not have that kind of destabilization.
Could we see another Tiananmen Square?
Absolutely. If their economy collapses, you'll see it very clearly. And you're already seeing, as I said, unrest continuing because of the difficulties in the markets. Matter of fact, another interesting thing, people protest that they paid a certain amount for their apartments or their housing, and now the developers are lowering the price. And now the people are angry because they lowered the price and they paid a higher price. So there are even riots going on about that.
Welcome to a free market economy.
Semi-free.
Semi-free.
Yeah, because the China economy, state SOEs, state-operated enterprises, are really a big part of it, and the Chinese government is in control of that country.
We'll have more with Gerald Celente when This Week in Money returns.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Gerald Celente. Gerald, is President Trump likely to legalize marijuana?
Yes, I think the federal government will at some point. They're already making it possible to do monetary transactions. That's on the both agendas, the Senate and the House. So I think it's only going to be a matter of time before the federal government drops its restrictions on cannabis.
Is it because governments are desperate for revenue and they look at pot as a cash cow?
Oh, exactly. That's one of our featured stories in the Trends Journal. And remember, in the Trends Journal, we forecasted reefer money madness a number of years ago, 2016. We said this is going to be a thriving global industry, and it's thriving already. It's going to keep growing. And the same criminals who criminalized it, people call them politicians, but they're nothing more to me than a criminal class. They've ruined the lives of tens of millions of people over the decades by throwing them in jail for getting high or selling an ounce. Now they're legalizing it because they want tax revenue. Same thing they did with alcohol when they had prohibition. Yeah, they did away with prohibition because they wanted the tax revenue. That's all it's about. They need tax revenue, particularly in states like New York, where you're seeing, nearly $3 billion budget deficits. So they need to bring in more dough, and that's why they're legalizing it around the country.
Is President Trump doing a good job so far compared to previous presidents?
Well, I don't rate good jobs, bad jobs. There's things I agree with him with and things I don't. Just on the facts, totally against his warmongering and other geopolitical actions that he's taken. Promised to pull out of Syria and is still there. Saying the Golan Heights belongs to Israel against international law, and his aggressiveness against Venezuela, a number of things like that. On the positive ends, we need new trade deals, because when you look at where the country was before the trade deals, we're in much better shape. So he's making some progress on that line. But no, overall, I'd rate him a C-. When you look at the tax breaks that have really only helped the very rich, and you don't have to believe me, just go to the Tax Policy Center. Over 82% of the tax breaks have helped the 1%.
Is the electric car market poised to grow?
It's going to grow, but we think it's only going to grow moderately. And I was talking about China. China had some of the biggest electric car growth last year, but now they're having the tax rebates, so we're going to have to see where it goes. Electric cars are going to be limited by their technology. Until there's a new battery technology, we see very modest growth in electric cars. Again, the battery was invented in 1800. It could only hold so much power. We have to see a new kind of breakthrough in electric before it really grows to any significant levels as we see it.
In Vancouver, Harbour Air, which operates short-hop seaplanes, is trying to convert its fleet to electric. Could other airlines be looking at that? Or because they're just a short-haul place, it's restricted to their kind of market?
You hit it. It's a short haul. And that's the same thing with electric. It's a short haul. And don't forget what happens when it gets really cold outside. You saw what happened this past winter in the States. Electric vehicles lost some 40% of their power in that very cold weather. So again, it's very limited technology.
A number of companies are hopping on the 5G bandwagon. Is that a good idea for the companies and for investors?
It's a good idea for companies and for investors, but it's one of our top trends in the new Trends Journal. It's not very good for your health. Radio frequency radiation is real. And the data is there. It's just not being reported. So yeah, that's what the world is going 5G, but it's also going very deadly in a lot of ways. And people, if they want to know more about it, they could subscribe to the Trends Journal. And we have a very, very detailed piece on the real health dangers of 5G.
A few years ago, Lloyd's of London said it would refuse to honor any insurance policies if they involved radiation illness from all these different microwaves. Is that something that people should be aware of? Your insurance won't cover any health problems caused by 5G.
I mean, why wait for the health problem? Why not stop it before it happens? It's going to be very deadly. The data's there. But people, I hear it all the time. They'll give up their health for convenience, and they're doing it now. Same thing with smartphones and other handheld instruments. The radio frequency radiation data is there showing the negative health effects, but people still use them. I don't carry a cell phone.
Are pesticides a threat to humanity?
Of course they are. They're not only to humanity, to all living things. The data is there for anybody to look at, read, and understand. But again, it becomes the convenience. And just like we just saw with the Monsanto losing a couple of lawsuits about Roundup. But farmers say they'll still use it because it's inexpensive and it helps them make more money. So health comes secondly, or thirdly, or fourthly. So yeah, of course, pesticides. Think of the word chemicals. It's the perfect word, chemicals. And that's all they do, they kill.
Well, I just had an allergic reaction to some strawberries, apparently, that had pesticide in them. And my doctor said it was the third or fourth case she's seen this spring.
Yeah, there you go.
Yeah. Did you get your flu shot?
No, I don't get any flu shots. Again, there's a number of, the data's there for people to look at. But now, of course, anti-vaccination data is being censored on Facebook, on Amazon, on Pinterest. One after another, they're censoring it. So you have to believe everything Big Pharma tells you and the moronic politicians and bureaucrats believe in.
Are mainstream media and social media becoming less relevant?
Oh, mainstream media is just about irrelevant. And social media is now being controlled by the monopolies. So, and if you have I'll give you an example. We put up one piece a week from our Trends in the News and Trend Vision podcasts on YouTube. And one of our forecasts in the Trends Journal, we're forecasting Beto O'Rourke is going to be the primary front runner in the Democratic race for the White House in the presidential reality show in 2020. And the headline was, the white Obama to win Democratic nomination. They flagged our YouTube piece because I used the term white Obama. They flagged us when we said economic 9/11. This is censorship at its worst, and it's only going to get worse.
What's your latest globalnomic view?
The globalnomic view is the global recession taking place at the same time where you're looking at a lot of social unrest because of income inequality, which is, of course, going to be a major issue in the 2020 elections here in the States, but it's worldwide. So you have the global unrest, you have what's going on in the Middle East, and you have rising oil prices and destabilization in South America, because if war breaks out with Venezuela, we're going to see a flood of human waves leaving Central and South America that's unimaginable. So those are the issues we're really looking at.
What's the latest on Occupy Peace?
Well, we need to raise more money because we want to have an Occupy Peace Festival here in Kingston, New York next September. And the logo is Liberty, Love, Joy, and Beauty. Join the evolution, Occupy Peace. So that's what we're moving to do, bringing in top entertainers, vendors, food, arts, crafts, and major speakers from around the world. And so we're pushing for that, and anybody that wants to support it, because we can't do it on our own. You know, if it's a dollar would help. Anything will help. Go to OccupyPeace.com, OccupyPeace.com, and all the information's there.
How can people find out more about the Trends Journal?
TrendsJournal.com. History before it happens, $129 a year. Monthly Trends Journal, trend alerts each week, trends in the news broadcast, trends in the Trend Vision podcasts, and much, much more. And if you can't afford it, you know, because we know people are having a tough time, a lot of people, there's a discount request page, and there's a money-back guarantee. If it's not everything we say it is, you get your money back in 30 days.
Gerald, thank you so much for chatting with us.
And thank you, Jim, and thank you for all that you do.
My guest has been Gerald Celente, publisher of the TrendsJournal.com. He was speaking to us from historic Kingston, New York. Coming up, Ed Steer next on This Week in Money.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Ed Steer, founder of EdSteerGoldandSilver.com and a director of GATA, the Gold Antitrust Action Committee. He's speaking to us from Merritt, British Columbia. Ed, welcome back to This Week in Money.
Greetings to you, Jim, and to your listeners.
Ed, how are gold and silver looking right now?
Well, I'll tell you what, of course, as everybody knows, there was a massive bear raid in the precious metals market on yesterday, and they got clobbered pretty good. But that was going into first day notice for April deliveries in gold. It's also the end of the month. It's also the end of the quarter, and then we've got this Basel III agreement coming up where gold is becoming a Tier 1 asset. So it was a whole pile of things that the boys used to take the precious metals down yesterday, but this is a short-term thingy, and it too will pass.
Yes, now, gold did seem to advance with some pretty good numbers, and then they knocked it down to just below $1,300. Is there a point of resistance here?
Yeah, well, the 50-day moving average got taken out fairly heavily yesterday. And that was probably the object of the exercise, to get as many futures traders to sell their positions as possible. This was a deliberate act. They broke silver below its 200-day moving average and palladium below its 50-day moving average. And like I said, April's a big delivery month for gold, and everybody who wasn't standing for delivery had to either roll or sell their positions by the close of COMEX trading yesterday. So that's certainly one of the big reasons why they leaned on the price of gold and the other precious metals yesterday, is get everybody, as many people as possible, to sell their positions so they could buy them.
What are the latest commitment of traders numbers for gold and silver?
Well, I'll tell you what, we get a new commitment of traders report this afternoon within a few hours or so, and it's for positions held at the close of COMEX trading on Tuesday. And of course, what's happened since Tuesday will have totally negated anything that this COT report has to show. And basically what we're going to get today is going to be yesterday's news in virtually every respect. So the current Commitment of Traders report is basically going to be useless. It's the one that's coming out next Friday that will show the results of how successful they were in cleaning out the futures contracts in the managed money category. So I would say right now, if I could see a COT report as of the close of COMEX trading yesterday, it would be very, very bullish especially for gold, and probably very bullish for silver as well. So the setup is great, even though we had to take some price pain in the process. But one thing I can say is that the bull market in silver and gold that began in early September of 2018 is very much intact, regardless of what happened yesterday.
Ed, what would you rather hold, physical gold or a gold certificate?
Well, that's a very nice softball question, Jim. Thanks for asking it. There's no question about it. Anybody who's thinking of purchasing gold for the first time should own gold in their physical possession, Canadian maple leafs or their equivalent, or gold bars of any kind. Paper is nice. I own physical gold and physical silver. And I also own some mutual funds that hold physical gold and physical silver, but I don't mistake the two at all. And if you're doing this for the first time, the physical precious metals in hand is the first step.
Ed, for people who get into gold for the first time, are they surprised how little metal can weigh so much?
That's exactly right. And of course, we'll 1 troy ounce is fairly heavy, because it's heavier than an avoirdupois ounce. But the thing that surprises people most when they buy physical metal is that basically you get 80 ounces of silver for every 1 ounce of gold. And anybody who's doing any buying for the first time, and I've been in the retail bullion business, so I know what it's like. People coming in for the first time say, want to buy some gold, and then you see how much silver they get. They get 80 ounces of silver for every ounce of gold. And 9 times out of 10 people will say, I'll take what I can get the most of, okay, because 80 ounces of silver is a lot more than 1 piddling ounce of gold. So it's best to buy both, but if somebody gave me $100 to buy something, I would be buying silver with it.
We'll have more with Ed Steer when This Week in Money returns.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Ed Steer. Ed, is the U.S. dollar still stuck in a trading range?
Well, I took a look at the chart just before we went on air here, and the dollar index, which was down around the 80 mark in June of 2014, rallied up to the 100 mark by the first quarter of 2015, and it's been stuck in a very narrow trading range for the last 4 years or so. It's a little lower now than it was 4 years ago, but basically it's stuck in a trading range. And it's my opinion that if it wasn't being managed, because the currencies are being managed like everything else, the U.S. dollar would have crashed and burned a long time ago, but right now it's in a narrow trading range. And unless they keep up the pressure on it, the natural tendency for the U.S. dollar right now would be to decline.
Is that because with so much economic uncertainty around the planet, the U.S. dollar is considered to be safe?
Well, the U.S. dollar certainly is considered to be safe, but the fact of the matter is there's lots of countries out there that are dumping the U.S. dollar and going into other currencies, whether it be China or Russia or whatever. And a lot of these countries are taking that money, especially Russia. They sold, 80 or $90 billion worth of U.S. treasuries, and they've been buying precious metals with it ever since. And there's lots of other countries that are shying away from the dollar, either using it in their transactions or converting it into euros or yen or some other currency other than the U.S. dollar, because the U.S. dollar has been dominant for so many years, and people can see the writing on the wall. And as I just mentioned, it's my opinion that the American, the Wall Street and the banking system is keeping the U.S. dollar propped up artificially.
Now, the U.S. has put a freeze to interest rate hikes. Is that going to reduce support for the U.S. dollar?
It's certainly, no question about it. There's no way to support the dollar except through active intervention now. And basically, this is not just the U.S. dollar or the U.S. dollar. It has to do with the euro and the yen. All the world central banks are basically in a print or die mode because they've tried the borrow and spend and tax and spend route, and they've pretty much exhausted those. So the only one left is print and spend. And so the U.S. Federal Reserve, in not raising interest rates, is basically going down the same path as Japan right now. They're just going to go out there and support the stock market and print money and spend that instead. So the world has gone absolutely stark raving mad as far as the currencies are going, and they're all going to crash and burn at some point.
Are they obsessed with supporting stock markets and confusing a healthy stock market with a healthy economy?
You know, as Canada's Secretary Treasurer Chris Powell said back in 2008, there are no markets anymore, only interventions. And there's nothing out. There's no free markets in anything anymore. I don't care whether it's U.S. Treasuries, interest rates, the stock market, precious metals. Precious metals are being suppressed, as everybody knows. And they're keeping everything else aloft. They're trying to keep the paper game going as long as they can. Japan has made no secret about it. They're in there buying up stocks and ETFs to support their market, because if they weren't, the Japanese economy would have cratered years ago. And China has made no secret of it. They're actively intervening in their market as well. So now the Fed has finally acquiesced, and they're doing the same thing openly now. So, like I said, there are no markets anymore, only interventions.
We'll have more with Ed Steer when This Week in Money returns.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back to This Week in Money. We're speaking with Ed Steer. Ed, how are the HUI and XAU indexes looking?
Well, I'll tell you what, everybody's boo-hooing about what happened yesterday, but if you take a look at the HUI chart right now, as I mentioned earlier, this rally began in the first part of September of 2018, and it's been heading unevenly higher ever since. Of course, we had a setback yesterday. But this bull market in precious metals, in their stocks and in the metals themselves, is very much in its infancy. But right now, this bull market is intact. And if you're ever going to buy into this market, a day like yesterday or even today would be a good time to put your money down, because this bull market is a long way to go. And as we were talking about earlier, with the interest rates not going anywhere, the banks in a state of print or die. There's no way they're going to be able to contain inflation going forward, and precious metals are the absolute rock guarantee that you'll be able to protect yourself from that event.
Are junior gold and silver stocks showing any strength?
They are. They certainly are. But like the rest of the precious metal equities, they're doing it in fits and starts. I think that once we have this sell-off behind us and we start moving higher in price again, I think that we're going to see a huge recovery. And if you're looking for maximum return, the small junior producers in both gold and silver are the ones that are going to turn in the biggest gains.
What are you more bullish on, gold or silver?
Well, you ask me that question every time we get together, and the answer is always the same. It's silver. Silver has been suppressed in price going on 40 years now. And if it wasn't for J.P. Morgan sitting on the price, it would be certainly higher, much, much higher than it is now. You know, the gold-silver ratio is something like 85 to 1. It comes out of the ground at a ratio of 9 ounces of silver for every ounce of gold. And if we went back to even 20 to 1 ratio, that would mean right now that silver would be 4 times higher in price than it is today, which is, a pretty big number, like $64 an ounce. It's my opinion it'll probably go much higher than that. So there's no question in my mind. I've been invested that way for over a decade now. And my portfolio is heavily in silver.
Ed, what's the latest with the Gold Antitrust Action Committee, GATA?
Well, Chris Powell is over in Hong Kong right now. He's speaking at a conference there sometime this week, I think early next week, and then he's going to Singapore, and he has another conference he's speaking at there. Bill Murphy is, he still has his daily column at La Metropole Cafe, and he gets interviewed on the internet all the time, and I have my column as well, and I get interviewed by fine people like you. So along with Chris Powell's daily dispatches on our website, GATA.org. GATA is still very, very active putting out the word, but, everybody that has a free mind and is prepared to look at things objectively knows that the precious metal markets are being managed and have been for many decades.
Ed, how can people find out more about your newsletter?
Sure, they can just Google my name, Ed Steer, S-T-E-E-R. My column is called Ed Steer's Gold and Silver Digest. Just put in my name and that publication will come up, and they can go to my website. And I have a sample column there that shows what I put out on a daily basis. And if they're interested in subscribing, the freight is $100 US per year.
Ed, thank you so much for chatting with us.
Thank you very much, Jim.
My guest has been Ed Steer, the founder of EdSteerGoldandSilver.com. He's also a director of GATA, the Gold Antitrust Action Committee. He was speaking to us from Merritt, British Columbia. Our conversation took place on Friday. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Gerald Celente, Ed Steer, and thank you for listening. If you have any questions for the show or our guests, you can send them to info@housestreet.com. Now stand by for a company showcase update from Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HouseStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Thanks, Jim.
Larry, you've received some pretty good news from the U.S. What was it?
Well, that's a real coup for the company, and it brings us a lot of credibility. We are basically in partnership with them on a recycling program with their labs in the U.S., and that's with the DOE and a couple of U.S. national labs, Critical Metals Institute and Ames Labs, and some leading universities. So, they certainly we wouldn't be involved as a Canadian company.
or for that matter, as a private company, unless there was like we had something really good to offer the works, and we do. We've got a process for recycling batteries, and we'll be working with them on a recycling solution. This is a several-year program that basically we contribute our share by sweat equity, so it's not costing us anything. But I can tell you, it's costing a few $1 million to do that study, and we'll be solving multiple problems. The problems of material headed for landfills or to smelters for burning, a circular economy sustainable circular economy that puts nothing back into the environment, and we're providing a new source of supply for some of the highest demand metals and minerals during the 21st century technology, and that's a huge plus. I mean, if you can take the cobalt, lithium, and the nickel, manganese, and aluminum and put them back, because our process will actually bring out a product that is battery grade, and you can put them back into the batteries. That's a huge plus. Now, battery grade, what does that mean? All our numbers are worked on as just the metal price, and this is actually says that we can put it back with enhanced value, and I know that in cobalt that's at least 50%. I'm not sure. There's no numbers on that. It's not exactly well published out there, but there's a premium for that because it's a big plant that has to treat these chemically and bring them up to battery grade. So it's not a cheap shot. It's expensive, and that adds to the cost of the battery. So Amy's process makes commercial sense, environmental sense, ethical sense, and I think the markets are going to see that after this press release. We're getting manufacturers a chance to get their cobalt and from recycled batteries, not from conflict minerals from the Congo, where most of it comes from. This is a huge plus for the company. Now we'll be moving ahead with the labs. That doesn't mean that our MOU is not standing up in the Netherlands. We'll continue with that because they've got a nice process for actually treating the batteries and shredding them and being able to deliver them to us, where we get high content of recovery, and of course we still can get the 99.9% purity, which is what you need in battery grade. So this is, I think it's 99.6, but that's close enough. So it tells you that people are taking notice of Amy's process, that now we are going national on that with the involvement with the U.S. labs. And you have to remember that there's not many private companies that do deals with the U.S. lab, and certainly far less Canadian companies. So, yeah, we're very proud of that achievement, and we got our man in Washington D.C. It's Dan McGordy, who's worked hard on this, and and I have to compliment him and the rest of the team. Certainly, everything is falling into place for the company. We haven't had any, except for technical issues, we haven't had any backwardation on this particular property, or the intellectual property, our process for recycling the batteries. So there's a lot to say for the people that work on this, as they're doing a good job. And certainly Cametco does a good job. They do a good job of developing the technology and a good job of papering it up for patent application. So, so all I can say is that's a real large turning point for the company. I imagine after international recognition like this, or national recognition like this, we will be even more in demand for people to investigate our process. So that's where I'm going to end it. It's on an up note. It's on a Friday. The stock has traded a pretty good volume of stock in the last couple of days, and it's all to do with the press release. The last thing I'd like to mention is we're closing on $350,000 on the third tranche in our private placement. And again, in this market, that's a big plus. That takes us up to just near $1 million. And we've already got, the first 20% of the next, more than 20% of the next tranche spoken for. So we'll get it done. 1.5 million, maybe a little over. And but it hasn't been easy. There seems to be a concerted effort to keep the stock down, so that makes it difficult to complete the private placement. But we'll just keep plugging away. I mean, we got nothing but good news, and so that only helps the financing.
Larry, for people who are new to American Manganese, what are you all about?
We're a critical metals company that developed technology back in 2009 to 2011 with Chemetco for the treatment of ultra-low grades of manganese that's competitive with the costs of Chinese production. The grades that we treated were 2 to 3%. The Chinese production grades are 30 to 50%. So that was a breakthrough, and that's our cornerstone for our recycling. So it wasn't like we just stumbled on this overnight. This has been a long time coming, and it's getting close to 10 years of hard work to get to this point. But here we are. Larry,
for more information and where are you traded information, where can people go?
Okay, we're traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF. And we're traded in Frankfurt under the symbol 2AM. You can go to our website at AmericanManganeseInc.com for all the information that I talk about on this radio show. Most of it's on there. And you can reach me at 778-574-4444, or you can email me at LREAUGH@AMYMN.com.
Larry, thank you so much for the update.
You're welcome.
My guest has been Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on March 29th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.